people who will be chomping at the bit for this. So let's talk Bitcoin for a minute and the disruption of financial services writ large, maybe. So first, I guess let's talk about when you started to get interested in Bitcoin and how it evolved for you guys as a firm.
Okay, when we were so Brett Winton and I have worked together for more than a dozen years. Brett was at Alliance Bernstein when I was there as well. And I remember Brett coming into one of our brainstorm meetings. We have a brainstorm. We had one there every Friday, as we do still. And I remember he was talking about this crazy thing called Bitcoin. And we were just trying to get our, so that would have been probably, I'm going to say that was 2011. And, it was interesting, but it was so esoteric at that time. When we started the firm, we did not break out blockchain technology as one of the five platforms. Today, the five platforms are DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. But we didn't break it out then. We simply included it in what we used to call next generation internet. And we've broken that out into artificial intelligence and blockchain technology because we think both of them are going to be so profound. Now, I remember, so Chris Berniski did our original research on Bitcoin, and he'll tell you, he's now one of the partners at Placeholder. He'll tell you he was following next generation internet and was given this task, and he just fell down that rabbit hole and didn't want to cover anything else anymore, period. He knew. And I brought Art Laffer. I don't know if you're familiar with Art Laffer, the Laffer curve, supply side economics. He was my mentor at USC, University of Southern California, and he's a very well-known economist, Austrian school. Um, you know, he's been a wonderful mentor. I asked him, he's on our board of advisors, and I asked him, would he review this paper and say that he collaborated with us on it? And he had had a lot of offers like this because his mentor is Robert Mundell, who won a Nobel Prize for monetary theory. And so he is a global monetary expert as well. And so he said, okay, I'm not going to tell you yes until I read the paper. And the paper was so long, he said, okay, I'll say yes to that part, but no to that part. The yes part was Bitcoin. The no part was network security because he just didn't understand it. It was too tech oriented. The Bitcoin, though, what he said was, wow. He said, this is rules-based monetary policy. And he had been yearning for that ever since really 1971, when the US went off the gold exchange standard under Richard Nixon. He happened to be in that administration. And he knew that was a mistake, but he was so young, he had no influence over it. And ever since then, he's been looking for a rules-based monetary policy. We kind of had it with Volcker when he was trying to crush inflation. We moved into a money supply price rule. Money supply could only go up so much each week. And boy, every Thursday, just waiting at, believe it or not, the teletype machine for that money number to come over to see what the market was going to do the next week. It was every Thursday at 4 o'clock, 4:15. So that was good, and it did squeeze inflation out of the system. But as you might imagine, he believes, I believe, that monetary policy today is unhinged. And fiat money, we don't know what the ramifications of this experiment are going to be. I think a lot of people are complacent now because we were all worried after 0809 when the monetary base went up. I think it was to $4.5 trillion here in the US. And we thought, what's going to happen here? we're going to have an inflation explosion, which we didn't. And we didn't because the velocity of money started falling and started falling at an accelerated rate with 0809 accelerating the downward trend in velocity. So what that meant was all of the reserves that the Fed had put out there were on the central bank's balance sheets, and it had not been able to enter the real world because there was so much caution and fear out there. Okay, so now we are that much further beyond, and I should say the velocity of money has come down. It's been, I guess I didn't contradict myself. It accelerated during 0809, but it had been falling. And now everyone's betting it will continue to fall, but I'm not so sure that's a good bet. I think, and you can see it in the housing market, housing has taken off in this crisis. This is 100% different from 0809. It's the other side of it. So why aren't we going to see the other side of a lot of other trends versus 0809? And why won't velocity turn around? You see Walmart giving wage increases of 11% wage. I remember starting in the business in the late 70s and hearing this phrase, we have an inflation problem because of wage push. Well, is Walmart starting another wage push? I don't know. Here is what I do think is going to happen. I think for the next 3 years, the innovation that we're seeing explode right now is going to drive productivity growth to a significant extent. And that's a potent anti-inflationary force. So this complacency that we're talking about will probably continue. And I remember stories about the 60s when I forget who it was. There was an economist who basically said, you know, the business cycle is dead. This was the 60s. We were basically working into one of the worst recessions we've ever seen. That was because of the quadrupling of oil prices. And that's because of the complacency, you know, and that's one reason we went off the gold exchange standard. So I think after all these years with inflation not taking root, we're probably got another few years thanks to productivity growth. But if we get velocity turning around to any great extent, then what you see as kindling on the bank's balance sheet right now, that is going to turn into a fire. It'll be loan growth and it will be inflation. So for those of your listeners who own Bitcoin as an insurance policy, we think that's a really good bet.